Everyone, welcome. Hey guys, welcome. We'll get started shortly. Welcome. All right. Hey everyone, welcome. Hey Daniel, welcome. Hey Latoya, welcome.
Hola.
Guys, we'll get started shortly here. Hey Zaire, welcome.
Hey, David.
Hello, we'll get started shortly. Hey Tracy, welcome.
Hey, David.
Hello. Guys, we'll get started shortly here. This evening, we're going to do Q&A. All right, so Q&A. We'll get started shortly, guys. Hey, Stella, welcome, Stella.
Hey, David.
Hello. We'll get started shortly. Several of the indexes closed today. The Dow, S&P, NASDAQ, and Russell all closed their short signals, guys. So we'll go over that. Hey, Gerald, welcome. Guys, we'll get started shortly.
I'll take care.
All right, guys, let's go ahead and get started here. All right, I'm going to share my trading screen. Okay, let's see here. All right, so you guys should see my trading screen here. 1 second. It should say Monster Market Tracker. All right. This is Q&A. So this is your opportunity to ask any questions on the markets, any particular instrument that you guys want to take a look at, whether it's stocks, so equities, Forex, cryptos. But before I open the floor, I want to go over what happened today. All right, and we've been monitoring the major indexes, right? We had two indexes. I think it was the S&P and the Russell that gave sell signals right here. All right, so the S&P and the Russell. Well, today we also got sell signals on the Dow, and also on the NASDAQ. All right, so we want to be very, very careful with puts. okay, and shorts, because again, we've got sell signals. I don't know if you guys can see this. I'll open them up one by one here. So here is the Dow right here, guys. Buyers are coming in. We got a sell signal to close the short. All right. So so currently we do not have a signal on the market, right? So we're going to expect some consolidation in here. So that was the Dow, the S&P. We know about the S&P. All right, so here was our sell signal to close short on the S&P. Green candles, buyers are coming in. All right, I just want to go over this before we get started here, because this is important. On the NASDAQ, right here, and the NASDAQ had been lagging a bit, but look here, we got a sell signal to close the short on the NASDAQ, okay? And then on the Russell, we also have a sell signal on the Russell. Let me open it up here. So right here on the Russell, we've got a sell signal. Actually, it's a buy to cover. So when we have a sell short signal, we buy to cover. Okay, so green candles are coming in, buyers are coming in. Okay, so right now we do not have any buy signals to go long the equity markets. All right, but we also don't have any sell short signals anymore. So but the buyers are coming in, so keep that in mind. The VIX is moving lower. So as you guys know, as the VIX moves lower, guess what? That will improve the buying. We'll get more buyers coming into the market. All right. Several new sectors have popped up, right? So US home construction, home builders, that's up, right? So these are new that just popped up. Materials and transportation are all up. All right. So definitely a rotation happening in the equity markets, right? From bearish starting to get a bit more bullish. Okay. But again, we still don't have any buy signals yet on the indexes. Okay. So I just wanted to go over this, review this. Okay. Because now we've got all three of the major indexes all close their shorts. Okay, so this is important. This is important. All right. Any questions on this? I'm going to open up the floor. This is Q&A, so this is your time, guys, to ask any questions. Okay. So I'm going to open up the floor, and any questions at all you guys have, just go ahead. Any questions?
Well, I guess I have one. Dave, Danny always asks questions.
Hey, Danny.
Hello.
All right. Hey, Danny. How are you?
Good. There a specific stock like the NASDAQ 100 or something that moves the Forex that the Forex reflects, or is Forex in its own market?
Okay, then you were breaking up a bit. What's that? I'm sorry.
Sorry. Is there a specific market that Forex is influenced by, like NASDAQ 100 or the S&P 500, or is Forex is in its own wave?
Okay, so okay. I don't know if I quite understand your question. Okay.
So basically, is the Forex exchanges, like, you know, pound yen, USD CAD, are they influenced by like the New York Stock Exchange and stuff, or no? Like
yeah, I mean they can be. There is a correlation with the yen pairs. Okay, so the yen pairs, the dollar pairs, right? So usually what will happen as the markets go down, so if if the equity markets are going down, right, you will notice, I did have the dollar index on here. I'll put it back on there. So if the market is the equity markets, right, if the equity markets is bearish, right, going down, like we saw with these here, right, with when the major indexes are going down, you'll notice that the dollar usually go up. Okay, so when the equity markets are going down, when our stock market goes down, usually the dollar will go up. All right. Okay, and vice versa, when our equity markets go up, all right, the dollar will go down. Okay, usually, I mean, it's not 100%, but that's usually the case. There is a correlation with the yen pairs. Okay, so that's the dollar, right? There is a correlation with, in particularly the yen pairs. If you guys notice right here, when the equity markets go up, so when the S&P Dow, the NASDAQ, Russell move higher, you will notice that the yen pairs will also move higher. These pairs here will also move higher. All right. And when the equity markets are bearish, right, they're going down, usually the yen pairs will go down. Okay, so there is a correlation, Daniel. Okay, these pairs here, usually, that's why we have them in this order. Okay, usually the Aussie, okay, the Aussie pair, so the Australian dollar, the Kiwi, the New Zealand pairs, right? So the New Zealand pairs, Kiwi pairs, we call it the Kiwi, all right? And then the yen pairs all kind of run together. Okay, so that's a really good correlation. So if you notice that they're all blue, right? They're blue and it says up. So they're all moving together, right?
Now, should we be on guard for the sell signals because the indexes are down?
What's that, Daniel?
So should we be on guard right now since the indexes are down for the yen pairs and the other ones? Should we be cautious right now that they might turn to sell?
Yeah, well, you trade this independently, all right? So yeah, you still trade them independently. But yeah, so as these indexes are moving higher, you should notice movement in these pairs here. Now, that's just a barometer, right? We still trade them independently. Okay. Okay, does that make sense?
Yeah, 100%.
Okay, so the correlation, there is a correlation in Forex. Just remember this, right? With the dollar, right? The market. So when the stock market moves higher, the dollar tends to go down. And then there are times when it just does its own thing. Okay, when the equity markets move higher, the yen pairs tend to follow. All right, sometimes the Aussie pairs and the New Zealand pairs tend to follow. But I think the biggest thing to take from this right here, is that these pairs here, the yen pairs, the Kiwi pairs, the New Zealand pairs, and the Aussie pairs usually go together, just like they're doing now. The dollar pairs, the euro pairs, and then the pound pairs usually go together. All right, they usually run together, and that's important to know. Okay, that's very important to know. If you notice, most of the pairs, right, the dollar, euro, and pound pairs are all trending. Most of them are trending down. They're red and trending down. There are a few up within there, but that's to be expected. Okay, but for the most part, they're all moving down. These pairs here, right? So the yen pairs, New Zealand pairs, and the Aussie pairs are all trending up. And the way you guys want to, think about this is this, right? The yen pairs, New Zealand, and the Aussie pairs, they're part of that Asian market. Okay, so that Asian market they all kind of go together. So that market opens right around now. So 7, 8 o'clock, right, is when that market opens up. Okay, so they're in their region, and they're basically doing their own thing. All right. The dollar, so the dollar pairs here. You guys see the dollar pairs here? You guys see that?
Yes.
Yeah. Okay. So the dollar pairs, the euro pairs, and the pound pairs kind of go together. Their market starts, okay, around 3 a.m. So the euro and pound, okay, they start moving 3, 4 a.m. in the morning. All right. And then the dollar, so our market, right, the New York, we call this the New York session. They will open up around 8 a.m. in the morning. Euro and pound, right, we call that the London session. All right, or the Euro session, they open up around 3, 4 o'clock in a.m. in the morning. So they will run together, right? They run together for the most part, and then these here run together. Okay, so that's a better correlation to watch, Daniel. Okay, so if you're looking for a correlation to be on the right side of the trade, all right, so you would know, okay, these pairs here are all bullish. They're moving down, up, and we want that, right? We want to see where that whole region right here, all these pairs are moving in one direction, and we want to see where all these pairs here are moving in one direction. What that tells us is that they're trending properly. They're trending in the right direction. Whether these are up, long, or these are short, that's what we want. If it's mixed, right? If it's mixed, right? So if we have red in here, red, so up and down in here, up and down in here, neutral, white, then it's kind of mixed. We now here, because we've got solid buying, almost solid selling in here, we've got true direction, if that makes sense. That makes sense?
Yep.
That makes sense? Okay. All right. I know this is a long answer to your question there, but that's important. When you guys are looking for direction, yes, there, you've got some macro stuff that you can look at as far as the markets, okay, but try to focus in here. This is where you really need to be. All right, any other questions? Any other questions? Any other questions? No questions? Tracy, no questions for you?
Now, I'm not familiar with Forex. All that seems foreign.
Okay.
What you were just talking about. What are your thoughts though on Bitcoin? I had someone to ask about Bitcoin, or have a discussion about Bitcoin, which I don't particularly know a lot about that as well. And about like when you should trade it. Is this a good time to trade Bitcoin?
Okay, so let's take a look at it. That's a good question. All right. So let's do this. And the idea is, guys, when we do this, right, after we do this a while, right, we'll know, right? We'll be able to answer our own questions, right? So, Tracy, I'm gonna turn it back to you. Here's Bitcoin right here on the daily time frame. On the daily time frame here.
Okay.
Right? And you've been coming to this for a little bit now, right? So you tell me. You tell me.
Okay.
You tell me.
So looks like it's in the markdown phase.
Very good. Very good. It's in the markdown phase. Very good.
So I mean, I see it looks like it's consolidating right down there at the bottom.
Okay. Hey, Peter. Okay.
Well, I see those white candles, like it's just going in between support and resistance. So to me, this would not be a good time to buy.
Okay. And why is that?
Well, it hasn't gotten into the accumulation phase. It looks like it's in like markdown / consolidation to me.
Okay, so it's in the consolidation phase.
Yeah, is that correct?
That is correct. So
Okay.
it's, yeah, so it's not in the, it's not in the markdown phase. So very good. Okay,
Okay.
very good. Why is it not in the markdown phase, guys? Anyone out there? Why is it not in the markdown phase anymore? So look at the
Because
bit.
it failed to make a new lower low.
Yeah, awesome. Good
Okay.
job, Tracy. Good job. So it's not
Now
making.
you ask me this tomorrow, I'm not gonna know the answer to it.
Yeah, I'm very proud of you. Good job. So it's not making any lower lows, right? So it's not making, it's not continuing to enter into that redistribution phase. Okay. So it's not making any lower lows, right? It's not continuing to break support. All right. So this was the last time here. It broke, so it held. Right here is where it held. So good job. Good job. So let's draw it out, right? So here is resistance right here. The sell signal, right? Our sell short signal closed, right? Buyers came in. All right. So good job, Trace. So that's resistance there. And then here is support. And the idea is, Tracy and everyone, is that you'll get to the point, even if you don't have a system like this, just by looking at the price action, understanding the 4 market phases, you'll be able to eyeball your chart, and then you'll be able to decide, based on your knowledge of the 4 market phases and the current price, what you should do, right? So you shouldn't have to rely on anyone, right, to tell you whether you should be buying, should be selling, any of that. All right. So here is good job. So here is support and resistance. Price is absolutely consolidating. All right. It's absolutely consolidating. What could happen? Go ahead, Tracy.
I noticed that you're on a daily,
Mhm.
and it was my understanding that we need, as a new trader, I need to be on the 4 hour. Is that, do I use the daily or use the 4 hour time frame when looking at charts?
Yeah. So, and that's a good question. So our trading window will be on the 240, but that doesn't mean we won't trade the daily. So on the on Stock Boss, we trade the daily. All right.
Okay.
On
Okay.
Bull Master, we also trade on the daily time frame. On Sniper, we trade on the 30-minute time frame. So it really depends.
Oh my.
Yeah, yeah. It really depends on what we're trading. On Forex Dominator, we trade the weekly time frame. Okay, so it all depends on. Now the reason why we look at Bitcoin here on the daily time frame is because the daily is more accurate.
Okay.
The daily is more accurate. Okay, so if you notice here was our buy signal here, right here, our sell signal here, that's the markup phase, our sell short signal here, okay, our sell short signal here, right, our buy signal here, our buy signal here, our sell signal here, our sell short signal here, and then we exited here. So we made money here. Look here. We made money here in the markup phase. We made money here in the markdown phase. We made money here in the markup phase. Make money here in the markup phase. Made money here in the markdown phase. So just this chart right here alone is very profitable. Okay. Now, if we took this, and this is good to know, guys. Okay, especially if you're trading the systems, okay, just notice here, this is great trading, right? Great trading. So there's a good possibility, a good chance that if we get another signal, whether it's short or long, guess what? it will work out. It's not 100% guarantee, but based on past history here, we've got a good chance that, hey, if it breaks resistance, we might get a nice move to the upside. Okay. So for you guys that are trading the system, okay, you're trading the system, from time to time, watch how the system is trading. Okay, that pair, if it's Forex, right? If it's crypto, right? Bitcoin or another, another crypto or stocks, watch how it's trading, because that will, I mean, Peter, what was that stock we looked at yesterday that had good price action and good buy and sells? What was it? It was a stock.
What sector was it?
I think this is it. I think it was Pfizer. I think, yeah, it was Pfizer. It was Pfizer. Yeah, we looked at. So with Peter's stock here, Pfizer, same thing, Tracy. You see here, bought here, sold here, bought here, sold here, right? Made money here, made money here, got out on the pullbacks, bought here, made money here, got out on the pullback. So there's a good possibility that this trade right here, this buy signal right here, based on how it's done in the past, right, might do good here. If we had a losing trade here, a losing trade here, a losing trade here, then guess what? This trade right here, there's no guarantee, but it could be a losing trade. So the system can tell you, really give you a lot of insight as to how the price action is moving, and if it's moving properly, good enough to trade. Okay. Because if we put Bitcoin, so if we put Bitcoin on a 4-hour chart, it will look very, very different than this. Okay. Okay. So that's a good question. So if, let's see here, so let's go through this again. So here is resistance here, right? So here is support right here. Okay, here is support right here. All right, so this is accumulation right here, consolidation or accumulation. What would we do here? What would we do here, Tracy?
Okay, hold on. I'm trying to find your arrow here.
And anyone and anyone else, you can help her out right here. So we're
you
right
just
here.
wait. You just wait it out, wouldn't you?
Absolutely.
Until it breaks that, until it breaks that resistance and go into the accumulation phase or the markup phase before you go in to buy.
There you go. Absolutely.
Okay.
Yeah, good job. This is where, guys, this is where traders will lose almost all of their capital, right? And as traders, we need to know when to be in and when to get out. Here, we need to be out, okay? Because right here, we call this no man's land, right? There is no decision here, okay? Buyers, so these red candles are sellers, white candles are neutral, green candles are buyers, and you look here, this area here is very different from here. Here, all green candles, buyers are definitely in control. Down here, markdown phase, markup phase, markdown phase, all red candles, sellers are definitely in control, right? Indecision right here. Indecision right here. Buyers are in control. Indecision, buyers are in control. Indecision, sellers are in control. Indecision. So if you notice here, whenever we had indecision, guess what? We were out. We were out. We closed the trade here, waited. Sellers came in, broke support, got a sell short signal to go here. All right. Here, buyers came in right here, indecision, not tradable. Okay. Buyers came in, we got a buy signal, right? We got out here when the sellers came back in, indecision, kind of like here. All right, sellers got back in control, sell short signal, all red candles, sellers are in control, indecision right here. So this is where we wait. We wait to be, we are patient, waiting. This is not tradable. So if we take a look here at these markets right here, we have sell signal, sell signal, sell signal, sell signal on the indexes. Okay. So on the Dow, the S&P, NASDAQ, and the Russell, we have sell signals, right? What do you guys think will happen next? Anyone, not just Tracy, anyone. What can we anticipate to happen next? And that's everyone.
Markdown phase.
What's that?
Markdown phase.
Markdown phase?
Accumulation phase.
Accumulation phase. Very good. Very good, Peter. Accumulation phase. Okay, just like
Is that
here.
because the markdown phase is overextended?
Okay, let's look here. So why? If you guys look here, why should we okay, Tracy, what was that again?
I say, are we, like Peter said, expect accumulation phases? That's because the markdown phase is overextended?
No, not overextended, over. It's
Well,
over.
Okay,
Yeah,
just
not,
over, okay. It been in it, in other words, been in it for a while.
No.
Okay.
Can anyone answer why?
It's chopping sideways.
It's chopping sideways, okay. If you guys are using the system now, so why? Based on the system, why?
So I think big money is starting to sell off their shares.
Okay.
So
that's all theory, right? That's all theory. All right. So, but based on the system, let's go back and take a look at Bitcoin. So guess what? What did Bitcoin do? What did
Seeing
Bitcoin
white
do?
candles. White candles.
Yeah, so look here. So sell short, it closed. So just remember, guys, remember this. Whenever you don't, if you don't have a signal, either long or short, okay, so here is your short signal, right, to go short. Here is your long, your buy signal to go long. Do we have a signal right here to go long or short?
No.
no.
So we wait. That's your consolidation. So just remember, especially those of you who are using the systems, when we do not have a buy or sell signal, it's going to consolidate, because guess what? It's not trending up or it's not trending down, right? If it's trending up, it's in the markup phase, that buy signal will still be open.
So Dave, is accumulation the same thing as consolidation? Just a different word?
Yeah, it's the same thing. But just know that accumulation usually happens at the bottom. Okay, but consolidation, accumulation at the bottom, distribution is at the top.
Yeah.
Consolidation happens anyway. It's just another term of yeah. But your accumulation, okay, your accumulation is usually going to be at the bottom of your chart.
For whenever the stock like falls and it's ready to switch to the uptrend.
Yeah. So let's see here. So here. So this is your prime. This is your prime buying opportunity. This will always be your prime buying opportunity. And this is a good example here. All right. So here is accumulation, right? Broke resistance, price went all the way up, got out here, sellers came in, right? Now this is our buy signal here. We didn't have a buy signal in here. We waited, price broke resistance, right? Got out here, and look here. So the price came down, right? It made a high, This is just an example of right about $3, right? Came down. This is your markdown phase, markdown phase, markdown phase. And this is a perfect accumulation right here. All right. It's not distribution. Distribution was up here. Okay. Distribution was up here. Okay. Your accumulation will always come in. Now, this is also a consolidation. Oh, all right. Consolidation out right there. But the proper term, depending on where it's happening. All right. So this is accumulation at the bottom here. Because remember, they're accumulating, the big hedge funds, institutions, they're accumulating shares to now take the price higher because they're getting a really good deal. Okay. It came down as low as 59 cents. Okay. Buy signal right here. Price broke resistance right here. They're moving the price up, hopefully to get back up in this area here. And then hopefully just continue to break resistance and move higher. But they didn't buy it up here. They sold it up here, got out. Right? So we bought low, sell high. We're looking to buy low again in the accumulation phase, get into the markup phase and move higher. And notice that we do not have any buy signals. We did not get any buy signals, guys, until all the way down here. All right. And that's a daily time frame. So this is almost a year. As a matter of fact, it's a year. April here, that's April right here, to April, March, April right here. Almost a year with no buy signals until, guess what? This is pretty cool. This is pretty cool. It waited almost a year for all this, for the selling to come to a halt, right? Held a nice support. Buyers came back in. We got a buy signal here right at 84 cents. And now the price is at $1.13. Pretty cool. Pretty cool. Okay. Make sense?
Yeah, it makes sense. Dave, I got a quick question. I don't want to take up too much time, but where can I go as a new trader to learn? Where can I go to learn risk and reward management?
Okay, so risk and reward. Okay, so you tell me, what do you think risk and reward is? What is that? What does that mean to you? So you've heard the term, right?
I've heard the term.
Risk and reward or risk management, right?
Right.
Okay, so what do you think that it means?
You're looking at how much you're risking to gain something. Like if you're risking $1 to gain $2, your reward should be more than what you're risking.
Okay, can anyone help? And how do we determine that? How do we determine that? How do you guys, and anyone, how do you guys think we determine that? How do you guys think we determine risk and reward and money management? So money management, all right, risk and reward. Peter, how do you do that?
It's different for everyone. It's a personal choice. The first question is risk and reward. Generally 3 to 1, reward 3, your risk 1. That means if you're risking $200, hopefully you'll make 600. You want to have a, kind of help you determine whether you should take that trade or not, whether risk reward. And capital management for me personally, each trade I try to risk about each position about 2 or 3%. So for me, that's about $500 to $800 per trade. and I'm looking at whether I'll make about 3 times that to determine should I take that trade or not. If you're,
Okay.
this is just going normal long long stocks or short stocks.
Okay. So Tracy, I want you to think, and that's the way it's taught, right? That's the way it's taught. Exactly what Peter said, right? I want you guys to think a little bit about differently about risk management, because as a trend follower, which is what we do, right? So, you know, the book Trend Following by Michael Koval, right? So that's what we do. We do trend following. So I want you guys to think about risk management like this. So let's go back here. All right, let's go back. Which one was it? Let's go back to Peter's Pfizer. What was the symbol for Pfizer?
It's a PFE.
PFE. Okay. All right. Okay. This is a good question. All right. We don't talk about money management a lot. Okay. And that's because the way we trade, all right, and the psychology in the way we trade, which is trend following, right? We are always going for, not that we will get a big trade, but our mindset is this. Let's do this. We're gonna do the new highs. The new highs is a good example. IBD new highs. Okay, so I'm gonna challenge everyone, okay, to think about trading differently. Like when your mindset should be, right? We talk about trading in the zone and all of that, right? Okay, I think a bit differently as far as money management. Okay, so my thing is this, right? We are always going to go for the big trade. That's the mindset. Whether or not we get it, it's a different story. Now we need to know what we're doing. All right, we need to absolutely know what we're doing. We need to have a good process in place. Okay, but if the trade, like here, right, this is IBD new high, so these trades are making new highs, right? These trades are making new highs. Let me find a really good one here. So what most traders will do is, let's say they're in a trade and they get that risk reward. So they've made, you know, 3 times, twice their money, right? They will close the trade. All right, they will get out and close the trade. All right, and that's not based on there is support and resistance ahead, right? So they're not watching support and resistance ahead. They're not, you know, all they're basing that they're trading on is whether or not they've had that percentage gain, that money management, right? They've made enough money. I want to challenge you guys to think a bit differently, right? As long as the trade is intact, right? As long as the trade is intact, right? You don't have any major support and resistance. So let's say, for instance, the buy signal came in right here. The buy signal came in right here. Okay. At 199, currently the price is right here at 250. Okay, you might watch out for this area right in here. You'll know, okay, we've got resistance. We've got an area in here. We've got an area up in this area here. We had strong resistance before, strong support. That might be an area of concern. This should be your only concern. Okay, not how much money we've made. Okay, So as trend followers, we're going to let it run. We're going to let it run, right? And not base our exit on money management. Okay, now,
Okay.
okay, so but however, there is a built-in money management. Okay, so let me bring in another chart. This is your risk reward. Okay, so let me bring in another chart here. This is your risk reward. I'll go to another. Let's do this here. Here is your risk reward here. And it should be built into your system, into your process. So everyone, watch this. This should be built into your process. This is your risk reward. Okay. I want to find a really good one here. Hold on. This should be your risk reward. And it's not subjective, right? It should be built into your process. Does anyone who's been through the coaching, the one-on-one coaching, do you guys know what I'm talking about? You guys know what I'm getting ready to do? What's your built-in risk reward, money management? Anyone?
Yeah, David, I think I think what you're trying to get at, like, for example, if you pull up the Great Britain JPY,
Okay.
you wanna get in at that point where you got that buy signal and you want it run almost to the point of correction.
Okay. But I'm getting at something else. What's your built-in, for those of you who've done the coaching, use the system, what is your built-in, we have a built-in risk reward process. That's critical to what we do. What is that? We have a built-in money management, all right, risk reward that is.
I think
Go ahead, Daniel.
but the built-in risk or reward is you don't get out unless it breaks support.
Okay. What else?
That's the best I can do.
I'm testing you guys here. What is your built-in money management risk reward? What is your built-in money management risk reward? Anyone? No one? No one?
Trend following.
Trend following, yeah, that's part of it. What else? What else? What else? What else?
It will give us a signal if it breaks resistance, breaks support.
All right. Here, guys, here. I want to find a good example here. Not a perfect example, but look here. This is not a perfect. Oh, hold on. So Tracy, the good news is you don't have to, obviously, right? We don't want to trade our milk money, right?
Okay.
Okay. But we need to have a process in place. Okay. So your money management, your risk management is this. And everyone, I want you guys to write this down because you didn't say it. So we need to make sure you get this. All right. So write this down or remember it. We need to cut our losing trades quickly. So we need to get out of our losing trades quickly. And then we need to stay in our winning trades as long as possible.
Okay.
Okay. So we need to get out when we're wrong. All right. We need to get out quickly. And we need to stay in our winning trades as long as possible.
Okay. Thank you, David. I got to leave the call, but thank you though for
Okay.
answering that.
Okay, I'll continue. Okay.
Okay.
All right. So guys, look here. I can't find a good example here. Okay, here guys, here was a losing trade. Here is a losing trade. We bought here, got out here. That's a small loss. Bought here, right? Bought here, got out here, small loss. That's our risk management. Okay, guess what? We didn't take a big loss, right? Because we got out here. We got out here, we didn't have this big loss here. All right. Over here, all right, we bought here, we got out here, so we made money here. So the key is, right, we want to take small losses, big wins. Here, we bought here, got out here, okay? Bought here, got out here. So we need a process and a system in place that has built-in rules, right? Built-in money management rules, built-in risk management rules, where we cut our losing trades quickly, we stay in our winning trades as long as possible. Okay, that's our money management. Get out quickly when we're wrong, stay in as long as possible when we are right. All right. Same thing here. Small losses, small losses, small losses, small losses, big win. This big win here will pay for all our small losses. That makes sense? You guys see that?
Yes.
So we need to have a built-in process, right? And there are some things you can do with money management, right? Okay, there is some things you can do, but the goal is when we're wrong, we want to get out quickly, take those small losses, which most traders don't want to take. Most traders don't want to take these small losses. All right, but we need to have a built-in process and a system. This system, any of our systems will not let our losing trades get out of hand. That's not a winning process. We have to get out, cut our losses, small losses, and we need to have big wins. We can't cut our wins, you know, as the price gets into the markup phase, get out. All right. So this is our money management, small losses, big wins. And then we can continue to get even larger wins if we continue to build positions within the markup phase. And as the price breaks new resistance, we continue to add. This one trade right here, guys, this one trade right here, here is 1, 2, I finally got a good example here, but 1, 2, 3, 4 losses, right? So we can have 4 losses, right? 4 losses in a row, 1 big win, and this big win right here will pay for all 4 of these losses right here, because we've got small losses, cut our losing trades quickly, all right? And then our winning trade, we stay in that as long as possible, trend following, all right? So this trade right here, this one trade, we can, and I tell traders this, right? Not that we want this to happen, but you should have a process where you can have 6, 7, 8 losing trades in a row, have 1 big trade, and that should be able to make up for all our losses. So you can have a process, a system in place where it's batting 30% win rate, 20% win rate, and still do really, really well. Now, is that what we want? Absolutely not, right? Like Sniper is batting at 70-something%, right? So the better percentage we have, it's even better, but we should have a process in place. Worst case scenario, right? Worst case scenario, if we bat in 20-30% win rate, we can still do well, because guess what? We have a system in place to cut our losses early, stay in our winning trade as long as possible. So back to Tracy's question, right? As far as money management, this should be your money management. And obviously you don't want to trade your milk money, right? And you want to make sure you do proper sizing of your trades and your account. But it doesn't matter if you've done all of the sizing of your trades. If this right here, if we're taking big losses, let's say for instance, this is our loss, right? So we have a loss this size and we have wins like this. It doesn't matter what money management process we have in place, it's not going to work out. So your system, how you trade, your process should have built-in money management where it forces you to get out early when you're wrong, quickly. All right. But not only that, stay in the winning trade, not get out, stay in your winning trade as long as possible. Okay. I hope that helps. Does that help?
Yes, it does.
Now,
Yeah.
so go ahead. Stella, did you have a question?
No, I said, yes, it helps.
Yeah. So what's the, when we look at money management, as far as a process, what's the two things we must have or we must do? What's the two things? What's the two things we must have?
Cut your losses early and let your profit run.
Bingo. Good job, Zaire. That's it. That's it. That's, guys, that's all trading is. That's all trading is. All right. Cutting your losses quickly, getting out quickly, right? Getting out quickly, and then staying in that winning trade. That's why everything has your best trade, okay? And best trade means, right? Execution. Your execution will always, your best execution will always be support and resistance. Buy on a break of resistance, sell on a break of support. Right? Buy on a break of resistance, sell on a break of support. That's going to always be your best execution. Otherwise, your losses will increase, right? And your gains will be less. All right. So that's it. That's it. Any other questions before I let you guys go?
How's that trade going for Peter?
Which trade?
The one he stuck on the weekly, I believe. The break of support on IWM, the Russell.
Oh yeah, Peter can answer that, but he's been out of those
Bruno,
for a while.
My options got chopped up. Took a loss, but I'm still back at it.
Yeah.
Gotcha.
All right. Okay, guys. I will see you guys tomorrow. See you guys tomorrow for the beginners class. Keep an eye on the indexes here. So keep an eye on the indexes. All right. So the Dow, remember the Dow, S&P, NASDAQ all gave sell signals. Okay. So expect some consolidation in here. We do not have any buy signals. All right. So the VIX is coming down. So be very careful. You can trade, but just be careful. Expect things to be choppy. All right. Until we get a clear buy or sell short signal. All right. So, all right, guys, take care. Have a great evening, and I will see you guys tomorrow. Take care. Bye-bye.